Right, so amid all this to and fro on tariffs, what should currency traders do? Let's get more from Adam Button, Chief Currency Analyst at Forexlive. Great to see you. You think that in terms of the markets overall, not just currencies, we're at peak fear over tariffs right now?
That's it. I mean, this is normally when you would get it. Tomorrow we'll probably start to see some numbers leaking out, some ideas leaking out. Right now, we could be pricing in anything, and market's very fearful about what's happened. But we've heard better comments from Carney and Trump last week when they got together. We heard the U.S. saying fentanyl is being addressed. They're happy about that. So, you know, we're hopeful right now that they come out and de-escalate things around tariffs and that the market can kind of start to price in some certainty from here. Now, we could look very foolish about that by Friday, but I think that's where we stand right now. And if not, I mean, we could have all hell breaking loose in markets.
I mean, the Wall Street Journal has a headline today, Trump weighs broader, higher tariffs, but there's probably no point getting too caught up in speculation.
Part of the question, I think it is time to speculate about the numbers that we're going to have here now, right? So we're going to wake up on Wednesday morning or some point Wednesday and get a number, and maybe it's 10% across the board on Canada. Now, I'd weigh that's what's priced in. If you do surveys of market participants, they're saying about 10% on the world, 50% on the U.S., right? So, well, then you have to factor...
What was that again?
10% on the world,
yeah.
50% on China.
Okay, yeah.
And then where do we go from there? All right, does Canada retaliate? Well, politically, maybe it probably makes sense, too, during the election right now. Or maybe the U.S. comes out and says, well, 5% on Canada. Well, we'll probably take that as good news, but still, are we going to lay down on that? The U.S. might say, if you retaliate, we're going to escalate from there. So it's very tough to game it out right now. But that's, I think, where I would put par, about 7.5% on Canadian tariffs. And I think anything above that, you're running into problems. Anything below that, I think the market breathes a sigh of relief and the Canadian dollar can rally.
What about the Canadian, as you say, the tariff speculation is a major driver. Would you be a buyer of the Canadian dollar right now?
I think earlier in the month there was an opportunity as, you know, we got up to down to 67 cents. But right now we're looking at the domestic economy, right? You've seen maybe these stories about viral stories about airline cancellations, down 75% next month, this month, well, tomorrow. The month that starts tomorrow. So Air Canada meets today. It's their annual meeting. We're looking for some insight from them to see if these are real numbers, because it seems too high to me that we're getting that level of action in the real economy. We're seeing some of the real estate numbers. We've seen all the surveys. The Bank of Canada had some. We've seen consumer confidence in Canada. They're dire. They're extremely, extremely dire. Now, that could turn around if the tariffs turn around. If not, and if these numbers are real, if we see things like airline cancellations that are concrete actions that companies and businesses are taking, we're in for a really, really rough ride.
So at 69 cents and change, it sounds like you're not that keen on the Canadian dollar right now.
Yeah, I mean, I don't think anyone is really keen on any position this Monday morning. Right?
Yes.
We might as well, at this point, there was a time to panic in maybe February if you wanted to get away from risk assets. But at this point, I think everyone's hunkered down. Yeah, you're going to get some weak hands shaken out of a lot of things today. Today is not the day. We might start to see some leaks. If not, we have to wait. And I think we have to see the stock market fall another 10 or 20% before, you know, some of the sober minds kind of take control of U.S. policy.
That's interesting. Yeah, I think I've read that the U.S. CEOs, if they see the market go down 20%, an actual bear market, then they'll start putting real heat on the White House.
That's what's going to discipline things, right? When it gets, how bad will it get? Because ultimately, there's a line there. They're not going to tolerate that much pain in the stock market.
What about the U.S. dollar versus world currencies? I know that's a hard one with so many cross currents.
Yeah, the Canadian dollar's held up, but part of that is just U.S. dollar weakness. And the U.S. dollar is weakening broadly. On Friday, we saw the Nasdaq down 2%. The U.S. dollar was soft. And there was a time when you would guaranteed see the U.S. dollar strong on that. The market is losing faith that the U.S. administration is really committed to growth in the way it used to be. So there's this idea, there was always that Trump was going to have the stock markets back, that they do what was best for the economy. And now over and over, they keep telling us, no, we're going to take pain. And you now, if you're a global investor, you say, well, the U.S. isn't interested in growth. Why am I investing in the U.S.? Why am I buying U.S. dollars? Let's get our money out of the U.S. and invest it in places that are committed to free trading growth in these things. And at the same time, the Federal Reserve is starting to find itself in a pickle where it doesn't know what to do in terms of hiking rates. It's waiting. And by the time they figure it out, they're going to be behind the curve.
It's an unpleasant situation, isn't it, for the Fed, because inflation has not gone away.
Well, it's it. There's really nothing that's working right now in the U.S. I mean, socially, politically, culturally, it's all a big struggle right now. And a lot of the rules-based world order could fall apart in a lot of ways this week. It's a pivotal week. But, you know, everyone is sorting through these questions. And that's why I think we're at peak pessimism right at this moment. And I think, you know, I'm very hopeful that we get a lot of good news. And if not, and if they double down and continue to double down, I mean, there's not many places to hide. I think gold has been parabolic for the last year. Really, if you go back at this time last year, Trump got ahead of Biden in the polls. And since that time, gold has gone straight up. And it's been self-reinforcing with all the policies that have come along. And if it really gets bad, you can't hide in the Canadian dollar. You can't really hide in Europe. Maybe in sterling. I think they might be able to navigate through in the UK. But other than that, I think if it gets really bad, I think that's going to be the only place to hide.
I guess the old Swiss franc and canned goods. Yeah. We better leave it there. Thank you very much indeed.
Thanks a lot.
Our guest has been